Hello, everyone. We are so excited that you are here. It is Wednesday. That means it's our live retirement show. And we are so fortunate to have a guest with us today. We normally have Dave Hall with us, but we have Dan Mullen with us. Dan, welcome to our show today.
Thanks. Happy to be here, CR.
So excited. We were talking before the show, and you're out there in Utah. And how's the weather right now?
Well, it is a little snowy. We're hoping for a white Christmas this year.
That's awesome. Yeah, I'm down here in the Atlanta area, and it's definitely cold, but no snow. But I'll tell you, it's wonderful just to be able to just not have to shovel every day.
Yeah, that's precisely why my parents moved out of Utah. So I get it.
Yeah, I love it. Well, Dan, thank you so much for joining us and coming on and talking about reverse mortgage. It also looks like we have Harlan ready to join us. I'm going to pull Harlan in here as well. Harlan, welcome to our show.
Hey, good to be here. Sorry to run a little bit late. I was talking to a client actually about a reverse, and all of a sudden I realized, whoa, I got to be over here talking to you guys.
Yeah, no worries. We're just glad you're here joining us live and just bringing everyone up to speed that we are here always talking about retirement here every Wednesday, 11 a.m. Central Time. And today we get to talk about the fabulous topic of reverse mortgage, which is something that I think a lot of people don't quite understand. If they do, there's a lot of misconceptions out there. So I hope we get to break a lot of that down today and dive into the details of the show. And Harlan, I want to find out before we get into the details, where you're joining us from.
I'm in Minnesota, and it's really cold. It's like it's a 14 below chill factor, but it's going to get worse. I guess tomorrow night it's going to be 35 below chill factor, but it's 70 degrees inside, so I'm okay.
Wow. Well, that is awesome. Well, I'm again grateful for both of you joining us. And I just want to remind all those that are with us live today, if you do have a question or a comment, go ahead and get that into our chat. We'll do our best to squeeze those into all the questions that we have today. Again, we are live here on Facebook and YouTube, and we'll be running just about 30 minutes here. So if you have those questions, go ahead and get those put in. And the way we do our show is we throw a bunch of questions in here that have been brought up by different guests, either those that have sent it through social media, through our websites, through podcast, and even through our website. So again, if you have questions in the future, you can go to retirementriskadvisors.com/questions and get your question in there. All right, everyone, that gets us going. Are you guys ready to start talking about reverse mortgage today?
We're all set. I've got some of the questions that already came in, and we're all set to answer them. We actually have the answers. We didn't get stumped on any of them yet.
Well, that's
we're always ready to talk about reverse mortgages, CR.
Well, that's awesome. I'm so glad because we've got so many great questions coming in. But before we get into it, I do want to look up here. I've got questions here on both sides of my screens, but let's talk about how does a reverse mortgage work? I think I just want to kind of dive into some of the basics before we get really deep into this.
Yeah, it's really not nearly as complicated as people make it. Einstein said, any fool can make a simple thing complicated. And it takes a genius to make a complicated thing simple. So I'm going to try to be a genius this morning, and so is Dan. But the fact is some of the questions that we already received are, let's really begin with the end. 7 Habits of Highly Effective People, begin with the end in mind. Mm-hmm. So if a lot of questions resolved around, well, that's great, but what happens at the end? Charlotte said, 70 years old, said, is a reverse mortgage a loan? Willow said, if I get a reverse mortgage, how would the repayment work? 61-year-old. Mark, a CPA, said, after I pass, if I own the reverse mortgage, can I still leave the house to my children? And Sylvia, 65, said, if I get a reverse mortgage, would this mean the bank owns my home again? And so all of those things really can be answered by one simple answer. And that is a reverse mortgage. Yes, Charlotte, it is a loan. The only difference between this loan and any other loan is you don't have to pay it back until a year after you're dead, which no other loan exists like that. That's why it's so confusing. You borrow money, interest accrues, but you don't have to worry about paying it back until a year after you're dead, or 150, whichever comes first. So people say, well, wait just a minute. What happens at the end then? There must be a big problem. No, it just continues to go up, just like your house continues to go up. And at the end, here's the second biggest difference. The first big difference is you don't have to pay it back until the end. The second biggest difference is it's not paid back by you or your heirs or your estate. It's paid back by your house. You're offering up your house as collateral and also the payor for the mortgage, which you can't do with anything else. You can't just assign that, well, when I die, I'll have this debt paid for by my car, by my house. But this is one debt. When I signed my reverse mortgage in April of this year, I signed a paper that said release of personal liability. I'm not liable for it. My house is. So at the end, the interest increases. So if I borrow $200,000 and at the end I owe $300,000, well, theoretically, my house will, of course, be worth a lot more. But regardless of whether it is or not, Federal Housing Administration says, hey, guys, we trust that your house is going to go up in value. So we will guarantee that you never have to pay more than the value of your house. So if it's upside down at the end, FHA pays the difference, not my kids, not my estate, not any of my IRAs or life insurance policies or anything else. But if the house is worth $1 million with inflated values in the future and I only owe $400,000, well, that other $600,000 goes to my children. So in answer to Sylvia, the bank never owns your house. We're lenders, we're not landlords. So we're not interested in owning your house. Just like a forward mortgage does not create ownership in the house. You just have a liability against the house, and that happens at the end. Just like if you had a life insurance policy and you had a $50,000 loan on the life insurance policy and it was a $500,000 policy, at the end, your kids would get $450 because you already used part of your life insurance policy. It's really the same thing. Whatever is owed at the end is charged, zeroed out, and your kids will never be liable for any of it, nor you if you move while you're still alive.
And Dan, I'd like to have you comment on that as well.
So a common misconception that we see a lot out there is if I get a reverse mortgage loan and I end up upside down at the end of that reverse mortgage loan, it's going to cause a lot of debt, or my children are going to owe some money, or my estate's going to owe some money. No, that's not the case. It is only the house is the only recourse that is allowed to happen.
And one of the things you guys, you talked about is you brought up Mark's question there. After I pass, I owe on the reverse. If I owe on the reverse mortgage, can I still leave the house to my children? And you brought that up. And so let's talk a little bit about that, because I think that's where people are looking at when an heir is taking over. Where does that leave them? Because again, you talked about a few things there, Harlan, that I'd like to be able to say, okay, how do we bring that relief to somebody that says, yes, I want to leave that? Because again, when I'm thinking reverse mortgage, is somebody really leaving it to an heir? Is that their desire at that point?
Yeah, well, think about it this way. Let's say that I have a $500,000 IRA and I spend money out of that IRA throughout my retirement, and at the end, my IRA is only worth $300,000. Well, my kids then get $300,000. They don't get the $500,000, but they get the $3 because that's what's left. Mm-hmm. The same thing applies to my house. If I spend a certain amount of money out of the house, and then at the end, whatever is left goes to my children. So I still leave the house to my kids. There just won't be as much equity in it. So I have 4 sons, and I've showed them the amortization schedule. If I die at 70, 80, 90, 100, this is how much you're going to get at the end if the house is worth this. Now, we don't know what my house is worth next year, say nothing about 30 years into the future, but we can kind of project out what the normal inflation is and what's happened in the last 150 years. So if at the end my house is worth $600,000 and I've used 200, the kids get the other 400. They still own the house. They inherit all of the house, just like they would have if I had a forward mortgage or no mortgage at all. It's just that within a year after I die, they need to settle out the mortgage, either by refinancing it or using my other assets or their assets to pay off the difference if they want my house. But guess what? 99% of kids do not move into their parents' house when they die in their 80s and the kids are in their 50s and 60s. They sell the house and they really want the money. They don't want the house because they don't need it as a place to live. And with 4 kids, which one is going to move in? All of them? There's not room enough. So that's really the issue at the end is yes, the kids still inherit the house. There is no deed change. Now, we have to be very clear. There are some things that are not reverse mortgages, and those are called shared equity arrangements, which sounds nicer than reverse mortgage. It's worse because now somebody else, an investor, is owning part of your house. That's a whole different deal and not what we do. We are lenders. We are not investors that are coming and taking a portion of your house and literally stealing it from the next generation. We are simply giving you some of the equity that's sitting in the living room of your house to use. And we only give you 40 to 60%. We're not giving you 100% of the value. So it's not like we're buying your house. If you sell your house, you get 100%, but now you got to go find a place to live. Here you can have your cake and leave it too. As a financial advisor we work with tells all of his clients, you can have your cake, you can live in your house, and you can still leave it to your kids. You'll just leave less money than you would otherwise, but you'll have more money to spend on them while you're alive, and they'll get more from your Roth, your life insurance, or whatever other legacy you plan to leave them.
Perfect. Great point. All right. So let's talk about requirements. Let's dive into that, because I think that's another thing that people ask. So again, we get thousands of questions every year. And as we dive and talk about reverse mortgage, they say, well, let's talk about requirements. Let's talk about maybe age first and then go from that point.
Yes. Well, the number one thing is we card everybody. So people like Dan, even if he has no hair, it doesn't matter. We look at his birth date. I've got gray hair. It didn't matter. They still asked for my birth date. So I have to prove that I'm over the age of 62. So on my 62nd birthday, April 26th of this year, I had applied for the reverse mortgage. And on the 27th, I was able to qualify and close on my reverse mortgage. There's a couple of other qualifications. The payment is always zero, so I don't have to qualify for any payments. Very different than a regular mortgage. But I do have to qualify and prove that I can afford to pay the taxes and the insurance on my house based on my income and based on my assets. That's the biggest problem where people hated reverse mortgages. And people like Dave Ramsey said people are losing their house because of a reverse mortgage. You have to pay your taxes and insurance, whether you have no mortgage, a forward mortgage, or a reverse mortgage. And if I can't afford to pay my taxes and insurance, the reverse mortgage company will foreclose on me, because that has to be paid, and that hurts the collateral position of a lender. So that's the main qualification, that I simply have to prove that I am able and willing to pay those taxes on a regular basis. And they just take a look back over the last couple of years and say, looks like you did okay in the past. They take a look at my income. They take a look at what I have in my IRAs, and they say, yeah, it looks like he can afford to pay the taxes and the insurance. And then my wife and I were able to close on the loan. One other qualification, she's not 62. I have an underage wife. She was only 59, not 18, only 59 when we did the mortgage, but she qualified because she's married to me. So in 49 states besides Texas, in Texas, both of you have to be 62, but in the other 49 states, you just have to be either 62 or married to someone over 62 and prove that you can qualify for taxes and insurance payments. That's
right. I was going to say, that's no different than if you owned your home outright. You still have to pay your taxes and insurance and your HOA fees if you have them. Otherwise, you could get in trouble.
Mm-hmm. And so when we're looking at that too, what about if we're trying to do all the closing documents and the fees for that? Is that something you can also roll over as you're putting all this together?
You can. This is the only program that allows you to pay for your fees with something other than cash. You're paying for it with future equity that might be 20, 30, 40 years from now. And so let's say you're eligible for $20,000 or $200,000 and your closing costs are $10,000. Well, then you only get 190, but you don't have to pay the other 10. It just goes against the equity that is covered at the end when you pay it. So you can just roll those costs in. So you literally do not have to come up with any money at all in the beginning, except for a counseling fee, which is usually about $125. And that has to be paid separately out of your pocket. But that's the only thing that you will have to bring as far as cash. Everything else, because think about it, when you have an IRA, you've put hundreds of thousands of dollars in most cases into your IRA throughout the last 10, 20, 30 years. You've put hundreds of thousands of dollars into your house over the last 10, 20, 30 years. We're just giving you the money back that you deposited into an account that's called home equity. Mm-hmm. And so we're just refunding some of your money. My son just bought a house, 31 years old, and he called me on the way home and he said, "Hey, Dad, we just started on our reverse mortgage today." And it caught me aback a little bit. I said, "You're 31 years old, Josh." And he said, well, yeah, but Dad, if we pay for 31 years like you did, when we turn 62 like you, we'll get a refund of all of our payments. Well, that's technically correct. Most 31-year-olds don't think that way, except for the ones that are brainwashed by their father for years. But the issue is that you're depositing hundreds of thousands of dollars into something called a house in the form of home equity, which is not worth anything. And we're just waving a magic wand and saying, here, we'll give you some of your money back, but you can still live in the house and you're still guaranteed never to be kicked out. And you're still guaranteed not to be a problem to your kids at the end.
And you don't have to make a monthly mortgage payment.
Yeah, very, very true. Very well said. Dan, let me ask you, why a reverse mortgage when you don't need one yet?
So there are a lot of benefits to doing that. It's kind of like insurance in a way sometimes, is in that you buy it before you need it. If you use a reverse mortgage strategically, you can do a lot of great things with it, like preserve your IRA accounts, do some tax strategy. Harley, you can tell you can tell CR about what you're expected to save on taxes alone by using yours strategically. It's fantastic.
Yeah, it's interesting. And I should have really brought this up right in the beginning. Everybody thinks a reverse mortgage is something you get when you need it. And if you're broke, well, then it's a good idea. If you're an 87-year-old widow and you can't afford food, you should probably get a reverse mortgage. Well, that's true. But that's kind of like fixing the retirement car on the side of the road when it's smoking. You change oil long before you need to. Mm-hmm. So the issue is that a reverse mortgage for me was not a need. I'm still working. I can afford to make my mortgage payments. But why would I when I can put money into life insurance? I can put money into investments, and I can use that money to have fun with my kids and my grandkids while I'm healthy. So the issue is that it's a want. And the other reason why I'm doing it is using it as a tax strategy. A lot of people right now are using it for making the payments that Dan just mentioned on a Roth conversion. If you need to pay taxes on a Roth conversion, take the money out of your house instead of rating your investment. Mm-hmm. I've worked with Ed Slott, an IRA, the guy that talks a lot about IRAs that many of your listeners know. And he encourages people, use your house to pay your taxes, not the investment. It's more efficient. And you'll end up with a higher net worth, less equity, more cash. So, I always ask, whenever I got a big crowd of people, I'll say, can anybody tell me when the best time to borrow money is? And everybody says, when you don't need it.
Yeah.
Well, that's what a reverse mortgage is. You take out a line of credit, which only costs you the closing costs, and you pay no interest on any of the money that you're using. You make no payment, of course, and that money is available. My dad never used it until he needed it for long-term care. And when he had a stroke, he didn't have time to go in and apply for a loan. He had that money to take care of care so that him and mom could stay at home. That's a very significant issue. And the fact is that if you have that money available, you will use it for fun things. You'll use it for difficult things. You'll use it when the market goes down. You'll use it when you have to keep paying your taxes and insurance. You'll use it when you need to pay perhaps your long-term care policy that went up, or fix your roof, or whatever. And it's more
visit your grandchildren.
The fun stuff is we just had a guy that bought a $67,000 collector Corvette, and he was all excited about that. And he didn't want to take it out of his investments because the investments went down, but he got this opportunity to buy the Corvette. And he sends us a picture of where he's driving it all over the country in the last year. So a lot of different fun things that can be done from there.
That's fantastic. And I know I would echo what Dave, because Dave always talks about being a Boy Scout and being prepared. And so you're talking about that, making sure you're prepared way in advance. And I think, that's something I learned a lot from the podcast. And so I just want to remind everyone that Harlan, you were recently on the podcast with Dave on the Retirement Risk Show and talking about this and making sure that you're doing this well in advance. And that's something is, again, we go back to that question is, why reverse mortgage when you don't need one yet? And I think there's a lot of questions that come up along with that, but I appreciate that.
Well, there's thousands of people that I've originated thousands of these loans over my last 19-year career. And I've never originated one that wasn't used a little bit or a lot. Even though they thought they were not going to use it, they were not going to need it. And so from personal experience, it's been a godsend for a lot of people.
I definitely appreciate that. And I want to remind everyone, if you are here live, you can go ahead and get your question in on either YouTube or Facebook. We'll go ahead and get that squeezed in we can with the rest of the questions. And if you are not ready to put a question in, you can always get that submitted on our website. All right. So Harlan, with that, I still have a lot of questions in my group here as we talk about this. One of the ones I wanted to pull out here is that Augie was asking, are reverse mortgages truly a last resort for retirement funds?
Yes, fortunately, a lot of you would expect me to say, well, no, use a reverse mortgage first because our company sells these and this is what I do for a living. But this has been solidly well researched with literally hundreds of thousands of Monte Carlo simulations, every imaginable scenario. And it's been done by CPAs, CFPs, and university researchers at Texas Tech University, University of Wisconsin Superior, University of Illinois, Champaign-Urbana, American College, Boston College for Retirement Research, long list. And I've worked personally with some of these researchers. And what they found out is if you use a reverse mortgage first instead of last, conventional wisdom, use it when you have no other options, 3 things will happen. First, you will have more cash flow. Obviously, you're not making a mortgage payment or you're getting money from your house. Mm-hmm. Secondly, your income taxes will go down, which a lot of CPAs are very interested in. And the third scenario is your net worth goes up. You have less equity, but more cash. And that is a very significant issue that was not anticipated by the researchers when they started. They said this might be great for the retirees, but this does not leave as much legacy. My kids, my 4 sons, will actually get a greater legacy because I did a reverse mortgage at 62 and stopped making mortgage payments and took money out of my house instead of taking money out of other investments, also so I could invest more money while I was working because I'm still working past 62. So the issue is that if it's looked as part of an overall strategic plan, just like you look at when should I draw Social Security? When should I start drawing money out of my IRA? Should I pay taxes earlier as far as the RMDs or whatever? And it's just something, when should I use the money in my house? Should I save it till the end or should I do something with it earlier? And so there's 3 types of people that need a reverse mortgage or want a reverse mortgage at 62. The first group is still making a mortgage payment. They can stop. Their financial advisor should take a look at their numbers and say, what if they stop making a mortgage payment at 62? What will happen with that cash flow? Secondly, the people that have their house paid off. But let's take a look at the people that have their house paid off and say, what if we use some of that money now instead of using your IRA money or your life insurance money, whatever? And the third group of people really need to sell their current house because it's a house that they should not be in. It's a house with stairs. It's a house that needs a lot of repairs. It's a house that's not close to their grandkids. And so that's really a huge part of the issue that's really important from there. And of those people, Dan, maybe you can elaborate a little bit on just how that works in conjunction with IRAs and 401ks from a tax perspective.
So from a tax perspective, a strategy that we can use with the use of reverse mortgage is if you have qualified funds like an IRA, that tax deferred accounts, you can actually take money out of that. Well, what happens when you take money out of that? You get a 1099, right? Mm-hmm. So if you have some interest built up from your reverse mortgage, pay some of that interest, at least enough to get that itemized deduction, right? So if you pay that interest, you get a 1098 that comes back with it. That offsets that 1099 income. What you can do with that, if you have it set up right and you have the amounts correct, you can actually wait 5 days for the processing to happen and take that money right back out of your reverse mortgage. You effectively got a tax-free distribution from your IRA.
And I think that's one question that I was going to ask, because even going back to what we have for Scotty's question is, do I have to pay taxes on reverse mortgage payouts? And I appreciate that, because we're trying to talk about topics here that are, I don't want to say that people should know, but it's something a lot of times in this area, people just don't understand.
Well, that's so true. And any borrowed money is tax-free. So you can borrow as much money as you want out of your house and you never pay taxes on it. It's only like what Dan says. Well, the cool thing is that you can actually get a tax deduction And anybody that pays less to the IRS usually are quite interested in things like that. So that's a huge advantage of the no taxes on the distributions from a house, but potential tax deductions when you make payments, optional payments. You don't have to make a payment, but if you want to, I personally am going to do that because I'll save some money in taxes, but I'm never required to make a payment. I get a statement every month and it says, this is not a bill, which is kind of a cool bill to get when it's not a bill.
Yeah, exactly. Well, we only have about 5 minutes left, and I know I've got a couple more sections here to break down. One of the ones I wanted to get to is what we call the mechanics of this. And I mean, there's so many questions. I think there's probably 8 questions alone just in this section here. And we can dive into different types of reverse mortgages. We can break into how people qualify for this, if both names should be on the reverse mortgage. And so I think, Harlan, I'll give it to you to see if there's something in there specifically we can tackle in these last few minutes.
Well, I think we can do this pretty rapid fire. Some of them we've answered, but Ellis 70 said, reverse mortgage, do you get the full equity of the house? No, you keep some of the equity, and depending upon your age, you get 40 to 60% of the value. So we don't give you all of the money. You still have lots of equity from day one. And the only obligation you have, that's a good thing, is live there, pay the taxes and insurance, and that's it. So that was a concern that Haley had. But she also asked an interesting question. What are the obligations of the reverse mortgage company? We're obligated to send you a statement every month and allow you to live in the house until you're 150. It's a one-sided agreement. You can move whenever you want, but we're obligated to make sure that we keep you in the house until you're 150 or whenever you want to move. And there were several questions from Evan 62 and Libby 62 of if you took the mortgage out, what about the spouses? You should always have your spouse in the loan. If I die tomorrow, my spouse can live in this house until she's 150. You want to be concerned in the planning. A 30-year mortgage, it's unlikely at 30 years old that anybody's going to die. When I take this out at 62, it's likely that one or both of us will be dead by the time we're 92. You need to plan for that. It's a difficult thing to talk about, but you should talk about it. Jude, a CPA, said, what's the process of applying a reverse mortgage like? There's appraisals and there's applications, very similar to a forward mortgage. Takes about 4 weeks. If you're doing a purchase, we do them in about 2 weeks. But it's a lot of paperwork. It's annoying. And everybody that I've talked to, they're annoyed a little bit or a lot with the paperwork. This is a government loan. And so there's a whole bunch of paperwork. But once you're done, you're done. You sign one paper once a year and say, I'm alive and living in the house, and you send it back, and you never have to worry about paperwork again. So that's a pretty cool thing. We're talking primarily about the FHA home equity conversion mortgage. But the fact is that there's several jumbo type loans that go up into the $4 to $8 million range. And that's not the subject here. But if someone on the call on the presentation this morning is thinking about, well, I've got a $5 million house, what do I do? Well, there's other products that are available for the people with very high home values. So there's a couple other things, but the main things that we deal with is just the FHA home equity conversion mortgage, which is guaranteed by FHA and has normal interest rates that are just like the 30-year fix. Very highly regulated, very specific of what is offered because we're doing a protected class as far as the seniors. Matt is 62, and he's wondering if there's a type of home that wouldn't qualify. If it's a commercial property, such as, they live above a store, mixed use does not work and things like that. Farms that are working farms, only the house qualifies, the whole farm doesn't qualify. So if somebody's got 1,000 acres of ranch land in Wyoming, that's not a house that doesn't qualify for the reverse mortgage. So other than that, a lot of people say, well, who should get one? Almost everybody when they turn 62. That doesn't mean everybody needs one, but whether you have a big house, a small house, a medium-sized house, a house in the mountains, or a house in Wisconsin in the middle of or Minnesota in the middle of 30 below weather, it really applies to everyone in each situation in a different way. For some people, it'll save them taxes. For other people, it's going to make a difference in what they can do with the grandkids or doing something special. And in a lot of cases, it will save a tremendous amount of money in taxes.
Yeah, wonderful. And just in closing, Dan, do you have anything else you want to add that we could finish wrapping up with today?
Yeah, I would like to mention The only time I would recommend against a reverse mortgage is if someone is planning on moving out of that home within the next 2 or 3 years, because the closing costs are significant, but they're worth it, obviously, for all the benefits we talked about. But if you have to move again and incur those again, that doesn't make much sense. We like to do these on the home that the last home you're gonna own, essentially.
Yeah.
So.
Very, very well said. And Harlan, how about you? As again, we're a little over time here, but I'd love to see if you have any other words of wisdom to add, because again, we have so many questions. We could do this for an hour and still not get everyone. But again, we're just trying to help people to get a good understanding of what this process is and how this works for everyone.
Well, CR, I'm sometimes I can't get all of my words together in 30 minutes, but I did write a book which takes 3 hours, and I'd certainly like to offer it to your readers. They can buy it on Amazon, or they can get it from us for free through you because of your presentations and your podcast. But the last thing I want to mention is, before you just say, "Well, I don't think that's for me," on the back of my business card for the last 20 years, I've had this saying: "If something you thought about money and mortgages were wrong, when would you want to know?" So don't just disqualify things right away. Say, well, just a minute, because 20 years ago, I thought reverse mortgages were bad. And here I've made a career out of it and just got my own this year. And it's made a dramatic difference for my family. And not only me, but my parents, my wife's parents, my sister, people in our church, friends, relatives. We'd love to help some of your listeners make a dramatic difference.
And that's fantastic. I do have the number. I'm going to go ahead and put on the screen here for you. So if you do want to get a hold of them, they have that toll-free number there. And I think that'd be fantastic if we could get some of that. And I also have Elliot on here as well. I don't know if I can get this on the screen here. He said, send me a free book. Elliot's been a long-time viewer of the show. He's been on several times, and it's always great when we can get all those viewers on and again on the replay. So definitely we'll be in contact. But again, there's the number right there directly. So if they can get a hold of you guys, how does this process work? If they call the number, what's usually the steps that they take?
Really what it comes down to is we consult with them to see whether or not it makes sense. Then we do the application, and then we order the appraisal. And about 3 to 4 weeks later, we do the closing and give them the money. And it's because we're so experienced at it and have done it for so long, it's relatively painless. But again, you have to come up with a lot of the documentation, which is somewhat irritating, but you get over it pretty quickly.
Yeah, no, that's fantastic. Well, I can't thank you both enough for being on the show today. It felt like we just started, and now here we are, way 30 minutes past, but I appreciate your time. I appreciate your insight, because again, this is one of those topics that we get so many questions on, and people are always saying, is this for me? How do I do this? When do I begin? How do I do this? Make sure I can leave something for my kids. And I feel like you very well answered those questions and really got a good, a quick, kind of a synopsis of this whole concept. And I really appreciate your time.
Well, CR, I'm just a farm kid from Wisconsin who never went to college. And if I can figure this out, a whole bunch of people can figure this out. We appreciate you getting the message out, because otherwise we can't tell the story. And people just say, oh, reverse mortgages are bad. And that's covered in the 6th chapter of my book, Drugs, Sex, and Reverse Mortgages. Some things are good and some things can be used badly. So I'll let you figure out what the rest is in when you ask for a free book.
Yes, and we'll get all that taken care of. And again, for you, we'll go ahead and send out the details so you can get everything for that book as well, and especially for you, Elliot. And for those on replay, and again, if you have any other questions, we'll make sure you get you connected. And one more time, I'll get your number just on the screen here of that 866-912-4800. And once again, Dan and Harlan, thank you so much for being on the show. And I hope we get to see you on a future show. And definitely check out that podcast you were on with Dave. And I appreciate your time.
Happy to be here, CR. Thank you.